So welcome back to this week's deep dive here at MindShift Theory. And today we are going to do a deep dive on Home Depot. And Home Depot is one of those giant retailers that every single DIYer eventually finds themselves in, right? It's a great place for picking up supplies you need, but could it be a powerhouse in your dividend portfolio as well? So today I'm going to deep dive on Home Depot's potential candidate for your dividend holdings. And as per usual, we're going to go over the fundamentals, right? Because that's super important. And number two, we're going to go over some of the technicals and see where some of the best buying opportunities might be hiding. And then number three, which is personally my favorite, we're going to take a look at how Home Depot can pay you 3 times with the same investment using what we call the wealth triangle here at MindShift Theory. And if you're not familiar with it yet, we'll go over it later on in this video. So with that, let's jump in and see whether Home Depot should be part of your dividend portfolio as well as your wealth triangle strategy. Okay, so we're jumping into our wealth grid, which is an actual dashboard that we built specifically for dividend investors, just to see exactly, where stocks are and give you all of the information that you need right at your fingertips, right? It's super hard to actually get a lot of this information out of different places, and it's a bunch of mumbo jumbo. So we've literally distilled this information in a platform which is easy to actually consume, understand, and digest, right? Super simple. Okay, so right now we're in the stock analysis, and we're just doing some stock analysis on Home Depot, right? So I've crunched the numbers on Home Depot, and honestly, the value here is getting hard to ignore. Right now, the stock is around about $310. And when I look at the PE ratio, it's hovering right around the 22 mark. And this is where you can see the PE ratio. It's actually a bit cheaper than it has been in the past few years. And this usually tells me that there's a for sale sign going on this specific stock, right? But, even though there's a for sale sign, is it something that you should actually be buying? Let's take a look. Okay, so first and foremostly, let's jump into what everybody really wants to know, right? Home Depot is going to pay you an annual dividend of $9.23 per share. That's basically a yield of roughly about 2.9, almost 3%. It's equivalent to what you might actually be getting from a high yield savings account in the US. So besides the dividend yield that Home Depot is going to be paying you, there are a couple other fundamentals that is on top of my watch list when I'm actually looking for a stock to add into our dividend portfolio. And the Wealth Grid has actually laid this out really, really easy for you to actually see it as a snapshot, right? The other piece that I'm actually looking at here is the net profit margin. Is the company still solvent? Is it profitable? Is it profitable year on year, right? Yes, it is. They have a profit margin, a net profit margin after cost of about 8.6%. And then the true metrics that actually helps me decide whether I should actually add a stock into my dividend portfolio is the dividend safety metrics, right? We all want to have stock in our portfolio that is safe, right? That's not suddenly going to crater by 80%. So why is looking at the dividend safety metrics within this dashboard so important for me? Well, first and foremostly, it tells me whether the company is still solvent, right? Whether they actually have cash flow. Home Depot has a profit margin of 8.6% at the moment, net profit margin. But more importantly, they actually have a price per cash flow of 18.95. And look, it is cash that pays for the dividends, right? Not, accounting, mumbo jumbo essentially. Here's the other piece that's super important for me. What is their free cash flow per share? This metric is really important because it basically tells me that their free cash flow per share covers their dividends. And how do I compare this number? Well, you'll get your free cash flow number within the dashboard right under your dividend safety metrics. And if you take a look at the 1270 that you're seeing here and the 923 that you're seeing up here, the 1270 more than covers the 923. This is the annual dividends that they're going to pay to you, and they've got enough free cash flow to actually cover that dividend. And this is super important. The other metric that's really important for me to understand is, what is the payout ratio that they actually have for their dividends, right? So for me, the lower this number is, the better. Means that there's always money to actually pay for your dividends. And you've got a little bit of an explanation here. Why does this matter, right? It shows that the proportion of cash free is paid as a dividend. And anything under 7.5 is healthy, and over 100 means that the company is literally paying out all of the cash that they earned to pay the dividends that they're actually paying you, right? Not a good place to be. Home Depot is by no means in this situation. So a couple of other metrics to actually look at here is Home Depot's price chart for 12 months, a year, right? And you can see that, that the stock price has actually decreased by roughly about 12.38%, which again represents a great dollar cost averaging opportunity for anybody that already owns Home Depot, right? The other key metrics that we actually pushed into this dashboard is, what is the dividend growth analysis year on year, right? Is it growing? So you'll be able to find all the financial data and fundamental data that you're actually looking for on a specific company here in the wealth grid. And it's an application that we've created here at MindShift Theory, right? But there's something more important that I actually want to show you with regards to Home Depot, and that is exactly how you can actually make money off the same investment. I want to jump into what we call the dividend portfolio builder within the wealth grid, right? And I'm just jumping to another screen here. And this dividend portfolio builder is a place where you can actually build a dividend portfolio for yourself without actually, spending the money, and actually see how much you're actually going to get from a return perspective prior to you actually making that investment, right? So let's go in and actually just add a stock, right? Let's add Home Depot, and let's assume that you're going to add Home Depot as as part of your dividend portfolio. I'm going to add 100 shares because that's normally what is needed to actually sell covered calls, and we will get to that a little bit later. If I added this to my watch list, I can see that I'm going to be paying $31,000 for Home Depot. It's got an annual dividend of $923 for the year, which is essentially going to pay me $76 per month in dividend income, right? So you can go and add additional stock here. Let's add Lowe's as well, maybe as a ticker. Add 100 shares to that as well. This is both in the same vertical, right? Home builders. And the dashboard is actually going to give you a clean indication of exactly what your annual dividends is going to be and what you can expect from a monthly return for that $53,000 that you've just invested into these two stocks, right? Your portfolio yield is going to be roughly about 2.61%. It's also going to break down your holdings and exactly what you're going to get monthly and annually for that specific stock that you've actually purchased. And with that said, I want to jump into our actual trading platform and show you exactly where they might actually be buying opportunities for Home Depot. Whenever you are looking at a chart from a technical analysis perspective, always start in a higher time frame, because it basically gives you an historical overview of where the stock has actually been, and also gives you a couple of really good support and resistance buying levels that you might actually want to consider. So I like to start on a monthly basis. And on a monthly basis, you can see in this specific chart, we are looking at roughly about a 5-year period. The spike that you're seeing over here is basically your COVID period, right? Everything went completely bananas. And then you had a fall from grace, essentially. Stock consolidated, and it's actually made its low at roughly about 264. Now, here's some good support and resistance levels within this specific area. And if you want to know a little bit more about this, then come and join us in the Wealth Circle. We go over all of this technical analysis, support, resistance, etc. But nonetheless, then I'm normally looking at a weekly chart for that same specific ticker, because I'm going to get a little bit more granular here, right? And on the weekly chart, what is it saying? I am actually currently, eyeing this 310 to 300 mark area right around here somewhere. And why is that? Because this is an area where it's actually broken out of a consolidation range before, right? This is exactly where my cursor is right now, roughly about there. I'm also okay with it, with the stock coming down to roughly the 300 mark over here, where I'll be dollar cost averaging a little bit more, because I know that there's quite a lot of support there. There's also a psychological level, right, where people is going to, or investors is going to come back in and buy the stock because it's actually at a discount at that point. And then I'll basically go into a daily chart and actually see exactly where this resolves from a daily chart perspective. Right now, the stock has been in a downtrend, and it's a great time to actually consider dollar cost averaging on Home Depot right now. Again, as we said, the stock is roughly about $310. You also have earnings coming up which could have quite a impact on the movement of the stock. Now, as I said, I'm going to be watching this 310 and 305 and 300 number. There's a 10-point range between those three, right? So roughly about $1,000. And those are the levels that I'm going to be looking at for dollar cost averaging into this. And why so? Right? I might be dollar cost averaging at 310, and then I might have to dollar cost at 305, and then I might need to dollar cost again at 300, which makes my actual dollar cost average $305, right? So why am I willing to take a little bit of a hit on the stock price? Because I'm going to be expecting appreciation in Home Depot stock price, because I'm going to be holding the stock for quite a while, right? I know that the dividends are solid. I know that the company's not going to go anywhere. And I know that they're going to continue paying me that $923 per year, right, just for holding the stock. There's going to be appreciation in the stock in the long term. Now, the other reason why I'm not too phased with regards to dollar cost averaging on Home Depot is because of what we spoke about earlier, which is the wealth triangle strategy. So your wealth triangle strategy is none other but the following. One, you're getting appreciation on the stock that you're buying, right? That's the first piece. Two, you're getting paid a monthly dividend by just holding the stock, right? Or a quarterly dividend by just holding the stock. And the third thing that I actually wanted to talk about was, what does this actually look like from a covered call perspective? And this is the third leg to the wealth triangle. It is basically renting out the shares that you already own to somebody else. So how does that work, Ricardo? Well, let me show you by jumping into our trading platform again and showing you what a covered call actually looks like. Okay, so now we're back into the trading platform, and I'm going to just basically look at the option chain here. Now, I know that this is a little bit hard to see, but essentially on Home Depot, on a weekly basis, you could sell a covered call at roughly about anything between a 15 and 20 delta, right? For roughly about $200, sometimes $250 per week, incremental income on the dividends that's already being paid to you, as well as the appreciation in the stock that you actually are looking for from a long-term perspective, right? So think about that. You can see that I've actually got two positions on right now for covered calls that I've actually sold on Home Depot. And this is my live trading platform. I sold the covered call this week for $250, which is great, right? But think of it in the context of generating weekly income. If you can sell a covered call every week for $250, you're making money three ways here. And this is the wealth triangle strategy that we mentioned earlier. And if you want to know more about how you can implement this wealth triangle strategy on your own portfolio, then visit us at MindShift Theory for more information on how you can actually do that. So with that said, that's the analysis of Home Depot. And I hope that this video has helped you, look at Home Depot in a different context, and hopefully it's given you enough information to make a decision on whether Home Depot actually belongs within your portfolio or not. And today I even wore my orange t-shirt in representation of the Home Depot color, right? So if you found any value in this video, please give it a thumbs up and subscribe for more content like this. Or just share it with somebody that you think might actually find content like this valuable, somebody that's trying to actually build their own dividend portfolio and build their generational wealth for themselves and for their family, right? So with that, myself or Michelle hopes to see you in our next dividend deep dive video. We do this on a weekly basis, so remember to subscribe so you don't miss any of these videos. These videos are for educational content only. We do this analysis for our own portfolio, and we thought it would be valuable to share with other people to consider these specific tickers or these stocks for their own dividend portfolio. So with that, I hope to see you next week.